Guys, we gotta talk. The Fed just dropped the bombshell. I'm not even kidding. This is super important. So, in light, and by the way, this is straight off their website. In light of the substantial further progress the economy has made towards the committee's goal since last December, the committee decided to begin reducing the monthly pace of its net asset purchases by $10 billion for Treasury securities and by $5 billion for agency mortgage-backed securities. Beginning later this month, the committee will increase its holdings of Treasury securities by at least $70 billion per month and of the agency mortgage-backed securities by at least $35 billion per month. And if you guys remember, this was $120 billion per month, so now they're going to be doing about $105 billion, right? And beginning in December, the committee will increase its holdings of Treasury securities by at least $60 billion per month and of agency mortgage-backed securities by at least $30 billion per month. So they're going from $105 billion to $90 billion, and now we kind of get an idea of the rate of decrease. How fast are they going to be decreasing these purchases? Because we know Powell's been hinting towards the tapering, right? And raising interest rates, which we'll get to here in a second. We know he's been hinting towards this, but we didn't really know how aggressively he was going to go and do this. Was it going to be $5 billion for each mortgage-backed securities and for what's the other one? It's Treasury securities, right? Is it going to be $5 billion? Is it going to be $10 billion, $20 billion? So now we kind of know the pace here. It's about $15, $20 billion per month decrease. As of now, things are subject to change, and we can see the markets are going ballistic. SPY, which tracks the S&P 500, the second this news came out, SPY went from 461.20 to about 462.72, which I believe is an all-time high. It sure is an all-time high, guys. And QQQ, let's see what that's doing right now. This ended up shooting over $391 per share, hitting also an all-time high, just like SPY. So now that we have more clarity in the short term, and we do have Jerome Powell speaking here in about 10 minutes. So once I finish this video, I'm going to run onto YouTube and watch the Q&A and the official statement. Now that we got all this news, this is important for the markets, right? Because now we know, again, the rate of decrease that we are going to be seeing here over the next coming months. And, of course, this is subject to change. Anything could happen, but as of now, this is what we're seeing. And for interest rates, guys, we know that he's not going to taper and raise interest rates at the same time and go super aggressive mode. That would not be a good idea. But from what I've been seeing and what we've seen from recent reports and, officials coming out, as things stand right now, the market is betting the first rate increase will come in June of 2022, which is about 8 months away, actually 7 months away from where we are right now, followed by at least one and perhaps two more before the end of 2022. And in the most recent projections, FOMC members indicated a small likelihood of pulling the first rate hike into next year. So at this point in time, guys, it's happening. All this easy money, all of this money pushing into the economy, buying these bonds, low interest rates. This stuff is slowly coming to an end after we've seen one of the biggest, actually the biggest, monetary response to a crisis, like we saw obviously with the pandemic and all that stuff, which is what caused the huge purchases and, the 0% interest rates. So now we're seeing this alleviate a bit. We're slowly going back to normal, and the markets kind of price this in. I mean, it's not like the markets are shocked by this, and we're pushing up, we're pushing up on the news. So I'd love to know your thoughts. Drop me a comment down below. Is this changing your trading philosophy in the short term, your investing philosophy? Drop me a comment. Make sure to hit the like button. And by the way, M1 Finance, I got to shout this out here, guys. They just increased their referral from $30 to $50. So if you use my link down below, deposit $100, we each get $50 $50 to invest with. No joke. They brought it back. So take advantage if you want 50 free bucks. That's linked down below. And now let's bang out 3 stocks. Let's talk about 3 stocks that I'm looking at right now in the middle of the day as we are, well, it's actually more towards the end of the day now, as we are getting into Jerome Powell speaking. And by the way, when he speaks and he takes questions and answers, or he takes questions and answers them and most likely evades half the questions, right? We're going to see more volatility in the market, so be ready for that. Stock number 1 is Kroger, ticker symbol KR. This one's up over 4.5% today, and this chart's looking great. We hit $48 back in the end of August. We took a huge haircut after earnings about 2 months ago in the beginning of September. This went from $48.50 down to about $38.50 after earnings, and we've slowly, found support at about $38-40, and recently it's been ripping back up. As I said today, it went up over 4.5%. We took out the highs from end of October and from the end of September, and now we're at multi-month highs. And sure, it is a bit overbought, but I do like the momentum that we are seeing to the upside here. So in my opinion, Kroger, any mini pullback here, I'm looking to get in as a swing. And the chart on the year time frame looks great. The 3-year time frame looks great. All of these time frames are pointing to the uptrend continuing. So Kroger is stock number 1. It's looking very good right now. And stock number 2 is FMC. And fun fact, half of you, mostly 95% of you probably don't know this, but maybe if you watch my life story video, which I made, I used to actually work for FMC. That was the last job I had in 2017 before trading full-time and then starting my YouTube channel and so forth. That's just a fun fact. I used to work for FMC Corporation, right? And now the stock is up 12.5%. It's up over $11 per share on earnings that they just reported, I believe, this morning. Let me double check that. Actually, no, yesterday after hours. They did EPS of $1.43 versus $1.32 estimated, and revenue came in at $1.19 billion versus $1.17 billion estimated. So double beat, and UBS raised FMC's price target to $134 from $131, and they're maintaining a buy rating. So overall, solid beat. UBS price increase, buy rating, which is good for the stock, even though I'm not going to blindly buy it on that price increase. And I like it a lot because it's breaking out. It's above the moving averages. We're trading at multi-month highs, and it's it's looking very bullish. Volume's kicking up, momentum's there, and like I said with Kroger, and this one's even more overbought than Kroger, we got to wait for a pullback. So if FMC could take a little haircut to $100, that might be a pretty decent dip buy. And then the third stock here is GPS, which is Gap, and this one is slowly turning the tide. It's been downtrending for months. From the middle of May at $37, it just hit $21 in the end of October. It took a big haircut of 40%. Now we're finally breaking the trend. We're above both moving averages. We're trading at a multi-week high. And I think this one could really start pushing if it breaks above $25, $26, which was the high from the end of September. So I'm going to put my alert at $26 per share for Gap here, ticker symbol GPS. And I'm going to be watching for an extended breakout from there. So that's pretty much it, guys. Kroger, FMC, Gap, and that is a quick little breakdown of what's going on with the Fed. And I'm gonna go watch this press conference, guys. So if you all enjoyed the video, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon if you want all my real-time buy, sells, call outs, morning update videos, plus more access to me as well throughout the day. That's on Patreon, link down below. Make sure to also get your 50 free bucks. No joke, guys. This is free money. Check it out. Link down below. It's from M1 Finance. I love that brokerage. I use them for my YouTube brokerage account. And I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Good luck. Peace out.